Hello and welcome to Pro Trader Strategies Market Commentary for Monday, June the 22nd. My name is Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that impacts the overall markets with my market analysis. Well, I do the same thing in these daily market commentaries, but I'm layering on top of it option strategies according to some guidelines that I've come up with to implement into our portfolio or into my portfolio. But please remember, this is not solicitation on any of these underlyings that I'm talking about. We are here to educate you on how this process works. All right, so without further ado, let's talk about the economic data. Not a whole lot of being a Monday, but we did get existing home sales here in the United States, which is a pretty important data point. That came in at 3.91 million units, so 3,910,000 units. Expected to be 4,150,000 units. So a little bit lower than expected. There were no revisions to the previous economic data point there. European consumer confidence came in line with expectations across the pond. So that's about it for the economic data here in the United States and across the pond for that matter. So let's talk about the overall markets here with crude oil still up in those 40s. It's holding on to 40s even despite the fact that Friday, we started seeing the equities really fall off towards the end of the day. It was actually that rush to the Hamptons. I thought we were going to go sideways, but during the daily market commentaries, I forgot that it was triple or quadruple witching, which is stock futures going off, options going off, index things like corn and other futures expiring as well as the options. So it was a pretty crazy day. That's usually when we start seeing a massive roll selling out of the front and buying into the back. So that causes some of the markets to kind of act a little bit differently and see some weakness during those Fridays. And I kind of forgot about that, to be quite honest. All right, so crude oil up in those 40s still. Looks like it still wants to cover that gap. Remember, it's 41.05 is that gap that hasn't been completely covered yet. I still think that crude oil is a little overpriced at this juncture, especially with the overall economy the way it's looking. Gold futures moving higher by another $20 today, looking to test that 1788.80 area. That's the price where I've talked about with my long Gld trade. I'm looking for it to go up there and at least test that. This candle I'm not loving today, but I think we'll stay within this range. I do think there is going to be a test of that 261 Fibonacci extension. So I think that needs to be done again. We'll get some tweezers there, and it could blast through there if we see continued weakness in the equities. But today we are not seeing any weakness necessarily. Bonds up by about a half a point on the day, moving back into that area where I've talked about so much that I think that the pricing should be is right there in and around 183 to 177, 176 or so. We're back into that area. We're going to start seeing this, I think, build out some time and volume in and around this area. As we've heard, interest rates aren't going anywhere, and with the economic data points, we're just not seeing a V-shaped recovery in the economy necessarily. As a matter of fact, things like Disney, those companies, Apple said that they're planning on closing some of their Apple stores in some of these areas where they're starting to see spikes in COVID on the reopening. So, that's going to slow down, keep the economy moving at a much slower pace there. VIX is off a little bit today, and that's not out of the realm of possibility. Why? Because we're seeing a move higher in equities. You can see here the Dow Jones up 234 points. I talked about trying to settle in and around where we were on Friday, talking about Thursday's settlement. Friday, we broke below that. It was looking kind of bearish, but we're getting that snapback today. So we've gotten this little sell-off there and really no confirmation of anything. I talked about Wednesdays and Thursdays settlement and how that lined up to make it look like it was a continuation to the upside. Friday's candle kind of put a bit of a wrench in the old cogs there. While today getting that move higher is starting to make it look like we are still on a continuation pattern to the upside to at least go back to the point of control in the Dow Jones Industrial Average. Now, NASDAQ back above 10,000, you know, with the yesterday or Friday settlement moving to the lows on the day. Like after the close even, the markets continued to sell off. After the daily close, there's a trading session online after that, and it continued to sell off, and the equities across the board there as well. But here we have the NASDAQ up 137 points and back into the 10,000 mark. E-mini S&P is up 30, so everybody having a good day. This market really looking like it's ready to rebound to the upside. And we can take a look at the breakdown of the E-mini S&Ps. Basically unabated to the downside. We did at the last part of the day try to get some shorts to cover, but just keep in mind that those are probably the guys that were trading and just wanted to cover their shorts going into the weekend. So they brought that market up, but you know, the last hour of the day it was pretty heavy selling, and then you can see even after the close it kind of popped even just a little bit lower on those and readjusted for today. Overall market gets long overnight and no real attempt to do anything with those guys at this point. Pretty light volumes, not a whole lot to see here kind of thing going on. All right, here's the GLD trade. Now remember with this, I have on these GLD that I bought the 160 and sold 165 call spread. So getting long a call spread there. I paid $2.10 for it. I'm trying to get out for $3.10. It's trading around 277, so I'm a little bit away. Usually we expect if on this type of move it goes up there and kisses my short strike, which is that 165 short call, that I should be able to at least get to that 50% of you know, a 50% increase in my premium. I paid $2. I'm looking to get out for $3. So that move, I would have expected to be able to get out of that, but it's just not happening. Even with the expansion and volatility we're starting to see here a little bit. So I'm kind of trying to be patient with this one, trying to get out for $1 increase in that premium, and it's just not worked out at this point. I'm still hopeful that we'll be able to get out of this relatively soon. All right, so another thing we were talking about, remember MasterCard? We were looking at MasterCard getting called away from us forever. If you guys remember, we can go through this real quick. I'll try and break this down for you a little bit easier. Let me do this first. Let's pull up I want to see that so I can cover this all up. All right, there. So here's what we're looking at for the Mastercard trade. I've had this on for a little while, right? Involved in this whole COVID thing, right? I got in a little bit early before the whole COVID thing happened, and I went in and had sold March 270 puts in there, okay? And that was on February 25th. So we can see that right here, the timing was not great. February 25th was when I first started selling puts in here for 270. Well, that was before volatility blew up. It looked like we had high volatility, so that's why I always caution. Just because we have high volatility doesn't mean volatility doesn't go higher. Well, in this case, it blew through the roof, blew the top off of it. So with that sell on those puts there at the 270 strike, if you guys remember, I was able to collect, let's see here, the 270 puts in March. So I sold the March 270 puts. Okay. Sold the 270, sold the March 270 puts. I'm just put a little thing there. Sold those for $1.24. Okay. And then the next day we started seeing volatility really start to spike. I got a bit of a draw again. So I sold some more March 270 puts for the pricing. I wanted a dollar cost average. I did this Mastercard trade a little bit early, like I said. So added a little bit more to it at 222 the next day. Market starts really coming off. The market started coming off again. Then basically on the 12th of March, I decided to add some more to it, and basically made this a full tranche for me, because I started out with it relatively small ahead of this, and then got a little bit more aggressive. So I went into the March and sold the 215 puts. So I sold 215 puts. I doubled up here on the March 215 puts because I had done a little bit there. So now I've doubled up to a full tranche on this dollar cost averaging. And I was able to collect $4.10. So all in all, you know, we kind of go in there and you can see where my average is. It's closer to I'll figure that out here in a second. But collecting all of these as credits. So I got a credit there, and a credit there, right? So got some nice credits on that. And then, of course, we got put all of this stock, because you can see that on this March expiration, we are trading below $200 even. So, you know, 200 was the settlement on that close. So I got put all this stock, right? And if I figure that between 270 and 215, that break even is right around what, so I got 60, so 30, so 45. So my break even is right around 242, 50 is my 50 is my break even on the stock right now, right? Break even on the stock. So that's average on the stock there, okay? That's just this average over here. 240, 250, I think, is off the top of my head. Now, if I go through and add up all these credits, I get to keep all of those credits, despite the fact that I've got put this stock. So if we add up all of this, we basically come up with 250, or so I got 56 here so far. So 56, right? And then 56, and then I've got $7 here. So I've lowered my overall break even over here by another $7, and let's just call it 50 cents to make my math easy in my head. So now my break even on the stock is 235, right? 235 is my now, I'm sorry here. Yeah, $235 even is my break even now, $235. Okay, so I've lowered my overall cost basis quite nicely there. Then I start going in, and what do? We start doing covered call strategies on this stuff. So I go in and I sell the April 300 calls. So now I'm trying to cover some calls here. So I sold the April 300 calls to do covered call strategies on this. Lowered my overall cost basis by another $2.68 there on those. So I sold that, then rolled those out. The market's just not coming back. Volatility really started coming out on these. I had to get a little bit more aggressive. Remember, break even I've lowered. So I went in and just tried to get out for relatively close to scratch. Rolled those calls down on the roll. I rolled these down to 245. So rolled them down to the April 245 calls. And for that roll, I collected another $1.77 on that. So continuing to lower my overall cost basis on this trade. Those 45 calls ended up expiring, I believe, worthless right here. So here we're selling those April 45 calls, 245. They got called away from me. So yes, I got called away on some of my stock there at 245, and I had done that for so I had done that for a quarter of my overall stock on this. So this was to hedge a quarter of the stock there. So I got to split that up. It's not lowering my overall cost basis by the full tranche there. So basically, if I add this up and I come up with 5, 4, and then $4.45, I have to divide that by third. So I got to divide this by a third. So it is that somewhere around $1.50. I'm going to have to do the math in my head. I can't do the math in my head right now. Probably should have vetted all of this. So $4 and 45 cents divided by 3. I'm dividing this by 3 because I only, say for instance, I only was covering a third of the overall trade. Okay, so then I can't really average it exactly the same. I really only lower my cost basis by $1.50 here. So in that case, now my break even on the stock is $2.50, $2.30, $3.50. Right? This is a big 3. $2.33.50 is my break even on the stock now because of this collection of credit, breaking it down. Those 245 calls, I got called away from my stock. So some of my stock got called away at 245 there. A third of my stock got called away. So those got called away. Now I only have on, that other third. I ended up selling another third of that original amount here in the, actually I sold some May calls in there. So covered May calls, I covered, sold them at 290, sold them at 290, and I collected $1.13. And so this was basically half of the remaining amount. So I covered a third of them right here with that rollout. I also now am covering half of this trade with the 290 calls. So really I'm lowering my overall cost basis by 60 cents again. So now my break even here is 230, 210. Oh, 32.90 in my head. Yeah, so 232.90 now is my break even on the stock because this is only half of the original there at that 290 stock. Then I sold out 200 of the stock. I sold stock at 269. I'm just going to call it it's 269.87. Let's just say it's 270. So sold a third of the stock at 270 on that, and I'm still covered here. So now I have on a full covered trade on that. Rolled those 290s out to the 300. So I rolled the May into the June, rolled into the May to the June, and I collected another $2.13. $2.13. Now this is going back to it's being a full cover, right? So now I'm trying to cover everything that I have left on that trade. So this does actually lower it by 213. So now I'm at 230. 230.73 or 77. Right? So my break even on the stock is 230.77. And then these 300 calls right here. I've rolled these May 300 to the 300 calls. So I'm short 300 calls in going into this expiration. Well, they were getting called away from me all up until the last moment. You can see here we just kind of sloughed off and dropped back down below that 300 just late in the day. I mean, it was like a late inning sell-off, and they didn't get called away from me. So I got to collect and keep that extra $2.13, lowering my overall cost basis. Now, if we go back to what's going on today, now I just sold. So today I went in and I sold the July 330 calls. Now this is to cover everything again. So it's a full tranche, 330 calls for $1.61. Okay, so trying to lower my overall cost basis again for $1.61. Now think about this. We started out at 270. Throughout all of this, I've lowered my overall cost basis, from 240, 250 to 230. So another $12 I've lowered my overall cost basis on this trade quite nicely. And now think about it. You know, I've increased my covered calls now. I've lowered my overall cost basis. You know, I can make $100 on this trade from the upside, all right? And I've done a lot of work staying mechanical throughout all of this, all right? I've lowered my exposure to it. Yes, I did get a little heavy in Mastercard throughout all of this, probably more than I was really comfortable with. But one thing a friend of mine used to say on the floor of the trade that makes you the most nervous makes you the most money. Well, I don't know if that's necessarily the case here, but it did end up turning around. And that is also because we stayed mechanical throughout all of this and used these rules that I have for implementing options into our portfolio consistently over time and lowered that overall cost basis. So that's all I've got for you guys today. Like I said, trying to get out of my Gld trade, but this was something that was very important that we need to go over. You know, this is one of those loser trades that I've had to stay with constantly. You know, I got put that stock. Sometimes that happens to us, but we can turn lemons into lemonade using my guidelines here. All right. So that's all I got for you guys. Please take a moment to go over our disclaimer, as we are an educational company. All of this stuff is to educate you. It is not to give you guys investment advice as to where you should be trading like I am. So without that, any further ado, take a moment to read over that. And if you can't take that, take it easy.